calculate the monthly payment and interest for a mortgage. So we're going to play with this. All right. Now, just in general, and I say banks with any financial institution will grant a loan amount. Then payments are made regularly over a set period of time, usually 10, 15, 20, or 30 years, with the most common being 15 or 30. And then as payments are made, interest is added on to the remaining balance. Okay, so that's in general. Here is our formula, where P is the amount of loan, D is the monthly payment, R is the annual interest rate, N is the number of times you compound in a month. Generally for house issues, we're making monthly payments, so it's 12, and then T is your time in years. Okay, so just keep in mind what everything means, and this is an interesting formula, but let's jump into it. You find the house of your dreams. Your offer of $215,000 is accepted. You put $15,000 down for a down payment, and you borrow $200,000 from a bank for 30 years at a fixed rate of 4.5%. What is the monthly payment, excluding escrow taxes and insurance? Round to the nearest cent. Okay, now, remember, we are playing with the formula. P equals D times the quantity, 1 minus 1 plus R over N, raised to the negative N times T power, all over R over N. Okay, so now, what do I know? Well, I'm borrowing $200,000, so P is $200,000. It's 30 years, so T is 30. I know N is 12 because I make monthly payments, and my rate is 4.5%. As a decimal, 0.045. So now I can go ahead and plug in what I know. So 200,000 equals D times 1 minus 1 plus 0.045 over 12 raised to the negative 12 times 30 power, all over 0.045 divided by 12. Ooh, forgot my 5. Okay, now, first things first. I highly recommend you focus on this piece. Okay, so you can plug that all into your formula or your calculator at one time, doing parentheses 1 minus parentheses 1 plus 0.045 divided by 12 parentheses raised to parentheses negative 12 times 30 end parentheses end parentheses. Okay, if you do that, right, so plug that into your calculator at one time, go ahead and do that. And then that's going to be our numerator. Now, you don't necessarily want to round until the very end, but sometimes you can't help it. So if you have to round, keep it in your keep the decimal as far out as you can. Okay. So when I plug that in, I get a value that is okay. So I'm still going to have the 200,000 equals D times 0.740104, and it goes on forever. Okay. Now in the denominator, we have 0.045 divided by 12. And if you divide those two, you get 0.00375. Okay, so now we're going to focus on this piece. Because it's D times, right, we're multiplying on the numerator, it's okay if we divide these first. So if I take 0.740104, blah, 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 whatever is in my calculator, right, because I keep it in there, then just hit divide by 0.00375. So now I have 200,000 equals 197.361159, keeps going on, and that's times D. So if you have that in your calculator now, you should be able to then hit 200,000 divided by the answer key. If this doesn't make sense for you, that's fine. Just round and keep the decimal as far as you can. But you're going to divide both sides by this value. And when you do that, you're going to get an answer of D equals $1,013.37. So that's the monthly payment for this house of my dreams. Now, what is the total interest paid on this loan? Assume only minimum payments are made. So if I'm paying $1,013.37 per month, remember, 30-year loan. Okay, so I'm making this payment times 12 times a year, and I'm doing that for 30 years. So this piece right here gives me the amount for 1 year. Then if I multiply that by 30, that gives me 30 years, which is the life of the loan. So let's multiply those three together, and I get an answer of $364,813.20. This is the total payback. This is how much I'm paying over the course of 30 years. Now, I didn't borrow all of that, right? I only borrowed $200,000, which means the difference, $164,813.20, that is how much I spent in interest. So you borrowed $200,000, but you paid $164,000 in interest. All right. Now, I'm going to do one more example playing with this formula. If that's enough for you, then hit stop and move on your merry way. If you want to see one more example, stick with me. You want to buy a house. You can afford a monthly payment of $850 without escrow taxes and insurance. The bank has a 30-year mortgage at 4% fixed rate. What value of a house can you afford? So we can use that same formula in a different way. So P equals D times 1 minus 1 plus R over N raised to the negative N times T power all over R over N. Now again, we know our house payment. So that's D. D is $850. My time is 30. Again, this is a house payment. So N is 12 and my rate is 4%, which is 0.04. So let's plug in what we know. Now I'm trying to find P, right? The value of the house I can afford. So I'm going to take 850 times 1 minus 1 plus 0.04 over 12 raised to the negative 12 times 30 power all over 0.04 divided by 12. Now, you can plug this into your calculator exactly like you see it. If you do that, make sure you put brackets or an extra set of parentheses, and you're going to want parentheses around your exponent and parentheses around your denominator. If you do that, you're going to end up with $178,042.05. I just think it's important to see that formula, that you can use it for two different ways. This case, if you're given your payment, you can find the value of the house. So just a little extra.